Ever worry about outliving your money in retirement? Well, today we're going to dive into a really powerful philosophy for building real, lasting financial security. And honestly, it's an approach that might just flip the way you think about investing on its head. Okay, so this is it. This is the big question, right? You've retired, you've spent decades saving up, working hard, but the day you stop working, the whole game changes. How do you actually turn that big pile of savings into a steady stream of cash you can actually live on? When you boil it all down, you're really looking at two very different roads you can take. On one side, you have the most common path, relying on the price of your stocks to go up. It's kind of like being a speculator. And on the other side, you have a path that's more about ownership, relying on the income those investments generate. So let's figure out which one offers a smoother ride. All right, so let's first walk down that conventional path, the one that's all about price. Now, on the surface, it seems pretty simple, but it's hiding a really dangerous trap that, a lot of retirees unfortunately fall right into. It puts their entire financial future at risk.
Here's the fundamental pressure cooker of retirement. The regular paychecks stop coming in, but the bills for groceries, for the house, for healthcare, they definitely don't stop. All of a sudden, your savings account has to do all the heavy lifting your salary used to do.
And this is where the trap snaps shut. To pay your bills, you've got to sell off pieces of your portfolio. But what happens if you need that cash when the market takes a nosedive? You're forced to sell your shares for way less than they're worth. That means you have to sell even more shares just to get the cash you need. It's a horrible downward spiral, forcing you to sell at the absolute worst possible time. Okay, so if that's the trap, how do you get out of it? Let's explore the alternative path, the dividend philosophy. And this isn't just a slightly different tactic. It's a completely different way to build a foundation for your retirement, one that's designed to free you from all that market stress. The heart of this entire philosophy can be summed up with this one really powerful statement. I don't care if the stock price goes up or down, as long as it still pays dividends. Now, that's a radical thought, isn't it? Instead of obsessing over the daily drama of the stock market, your focus shifts to something much, much more stable, the actual income your investments produce. So what exactly is a dividend? It's really simple. It's just a slice of a company's profits that they pay out to the people who own the company. That's you, the shareholder. Honestly, the best way to think of it is like getting a paycheck, but it's from your investment, not your boss.
And this gets us to a really important idea. On one hand, you have all this unpredictable stuff, right? Daily stock prices, market conditions. It's all driven by emotion and speculation, pure chaos. But on the other hand, you have things you can actually analyze. A company's profits, its growth, its policy on paying dividends. These are based on real-world business performance. That's where you find the stability.
And this is the incredible freedom this strategy gives you. If the market totally panics and your stock price tanks, it doesn't really matter to your income. As long as that company is still solid and profitable and keeps paying its dividend, those paychecks just keep rolling in, just like clockwork. You're no longer a forced seller who's at the mercy of a crazy market. Now, of course, this whole thing only works if those dividend paychecks are actually reliable. So the big question is, how do you find the right companies, the ones that can keep paying you through thick and thin? Well, the answer is surprisingly simple. You invest in essentials. The rules here are refreshingly straightforward. You want to focus on companies that make things people can't or won't live without. We're talking food, utilities, basic stuff you use every day. And at the same time, you actively avoid businesses that sell things people cut back on the second the economy gets a little shaky. The logic here is just so powerful and, simple. You want to own a piece of businesses that people are going to give their money to no matter what. That creates a stable business with stable profits, which in turn creates the foundation for those reliable dividends you need to live on. It just makes sense. Okay, so let's pull all these threads together. Adopting this dividend philosophy, it's not just about picking a few different stocks. It's a complete 180 in your perspective. It's about totally redefining what financial security actually means. It really is the difference between being a price watcher and an income earner. The price watcher is a speculator, totally stressed, glued to the screen, just hoping to sell high. But the income earner, they're more like a calm business owner. They're focused on the real strength and profitability of their companies because their success is measured by the steady cash flow that lands in their account. And I think this is the most crucial point of all. Maybe, just maybe, we've all been taught to look for security in the wrong place. Maybe it's not found in some big, flashy number on a screen that goes up and down. Maybe true security is found in the dependable, boring cash that just shows up in your bank account quarter after quarter. So I'll leave you with this one final question to really think about for your own financial life. When you look at your investments, where does your security really lie? Is it in the unpredictable world of market price, or is it in the predictable power of income?